Hey everyone, welcome back. Okay, so I'm at a different location. I came out of the bedroom, I came out of the quarantining, so I decided, you know what, I'm gonna shoot this video outdoors since it's beautiful. It's not too hot, it's not too cold. It's perfect to kind of shoot a video like this outdoor on a Sunday evening. So I wanted to talk about a little bit what I just saw in the news and also the S&P issue that I talked about in my previous video. So S&P is flirting right now at a very critical level. At around 4,000 level is the whole Wall Street is singing the song that S&P is going to basically go down to 4,000 level. And some of the analysts came and they said that S&P can go down as much as 3,800 level. So when we talk about S&P hitting 3,800 level or dipping below the 4,000 level, right now it's sitting around 4,100 or so. What does it mean for us stockholders? And one of the actually viewers asked a very important question that if you think bank stocks and majority of the stock market is going to suffer for the next 2 to 3 quarters, why are you buying the stock after the earnings, which is let's say at $5 or whatever the price is? And my process is, or my thought is this, and I'm going to share it with everyone. But before I go to that topic, let me share 2 pieces of news that I received or that I got on Bloomberg just a couple hours ago. So Bill Gates came out and he said that bears have strong argument on slowdown. So his words were, I'm afraid the bears on this one have a pretty strong argument that concerns me a lot. And his argument is that the economic slowdown that we are going to get, especially with the Omicron that hit before, then the Ukraine and Russia situation, and now the China lockdown. All of this came together to create this economic slowdown that not only US, but the whole world is going to suffer. And when the world suffers a slowdown like this, no matter what, no matter which part of the world you are, no matter what your economy is doing, it's going to get affected because China is going through a lot right now. And we all are connected because of the supply chain to China very tightly. So it's going to affect us. And this story is going to get bigger as China gets more aggressive in the lockdowns, as they are really trying to get the zero COVID policy. I mean, I was just reading the article. They mentioned that how China only has like these 3,700 cases a day in Shanghai, down from 4,000. So even with a strong lockdown, they are still not able to control COVID as they expected that they will. And this is all going to have an effect for us, for our economy, and also for the world economy, and then in turn, stock market. The interest rate is going to go up. The Fed is trying to control this inflation, this whole thing with the interest rate, and that's going to affect our economy. This is one article that I wanted to share. The second article I wanted to share, which kind of leads into the question of why I might buy now. Okay, the argument can be made for Apple. The argument can be made for Amazon. The argument can be made for SoFi. The argument can be made for any stock that you believe in is the right way to go. So one of the things we need to, or one of the words I want to introduce here is capitulation. So capitulation happens when investors liquidate their positions during period of extended declines due to fear of incurring even bigger losses. It eventually can lead to selling exhaustion and prompt fresh stock buying. And this article particularly referred to Apple. Why did Apple go down last week? Because Apple has been very stable. So when Apple goes down and the degree it went down, that concerns Wall Street investors, that concerns banks, that concerns everybody. So I wanted to kind of talk about Apple, what happened, and where do we see in the next few months the stock market take a turn. So the sign of this capitulation really emerged last week when the bond yields raised above 3%, and then Apple dropped, and then all the large cap drops. And the theme that I'm seeing in the market right now is, you know how we had buy the dip, now we have sell the bounce. Anytime we have a bounce, the equities sell off, the market sell off. And when we finally see the mega cap come crashing down, doesn't matter if it's Amazon because of the earnings, doesn't matter if it's Apple, Google, Nvidia, you name the company, Tesla, they all sold off. And when we see a 5% drop on Apple, or 5% drop on Tesla, or 10% drop on Amazon, 5% drop on Google, we know that now the mega caps are being hit. And it kind of forms the same pattern of 2020 crash when we had the growth stock get hit first, then it came to the value stock, and then everything got sold off at the end. So I personally feel that we are nearing a term where I feel the seller exhaustion is going to get real. And I'm not saying it's going to happen next week, I'm saying in the coming days. And so to answer your question, that why I'm buying or why would I buy SoFi after the earnings when I know that for the next 4 to 6 quarters or 3 to 4 quarters, it's going to struggle. All the banking stock is going to struggle. So my reasoning for that is this, that yes, Amazon, yes, Apple, yes, Google can come down further, but how much further can they come down? I feel that if Amazon drops another 7%, 5%, 10%, right, from its current level right now, and I buy, say, tomorrow, okay, I'm gonna lose 10% of my money in the short term. But then when the rebound happens, these large cap is gonna come roaring off the start. Like when people are in the market started buying again, these large caps are going to get really, I would say, get the bump first before the growth stocks. Now let's talk about SoFi. So for example, that why would I buy SoFi after the earnings? So if SoFi drops another 10% after the earnings, let's say the SoFi is at 550, okay? I'm just estimating. And let's say that SoFi drops another 10% after that. Does that really going to affect my buying at 550 versus my buying at, let's say, $5 or 480, 475? It's only 50 cents if you really look at it, right? So I feel that we are getting to a point where, and this is my thinking, where we are going to see people start to think this way around, where they are saying, you know what, okay, if Apple drops another 5%, that's fine, because if I can't, we are not timing the market here, right? Nobody can time the market. I've mentioned it many times. So we are timing our entry, and I mentioned in my previous videos that I always try never to time the market, but time my entry. So I might not hit, or I might not catch the stock at the pure bottom. I might catch it over here, and the stock can come down here. But then I would say when the buying comes back, the stock is going to go here. I still made the difference from buying not all-time low, but low. So that's why the companies that I can see myself holding for a long time, I don't mind getting them after this earnings season or whatever I have planned in this time. See, Tesla, I have alerted my Discord members, and if you would like the alerts, join our Discord and Patreon, links in the description. But I alerted my Discord member of buying Tesla. I bought almost 100 shares of Tesla just recently last week at like 865 and then at 850. And I've been buying Tesla since it was $55. So I'm not trying to say, oh my God, I bought Tesla at 55 or at 300 or at 200. I've been buying Tesla for a long time. Then why am I buying Tesla at 865 and then at 850? Again, Tesla could go to 750, 800. Sure, yeah, it can. I mean, if the whole market turns, of course Tesla can go to that. And then I'll be looking stupid, like, hey, I just paid $5,000 more. I could have saved $5,000, whatever, you know, and me buying Tesla. But that's not the point. The point is that if the market doesn't turn, or if the selling pressure or the buying buyers come in the market sooner than we expect, then I'm gonna miss out. And there are, in the history, you can count the number of days. If you have missed those days, you have probably reduced your gains by almost 30 to 50%. If you have missed those getting in days, you know, when we had that huge crash and we all got in. So for me personally, it has always worked out. Berkshire Hathaway, I'll give you an example. So that stock I bought in 2020 June, and that stock was at 270,000, the Berkshire A. I bought just one stock. And when I bought that stock, right after buying it, after like, I would say 5 to 6 days after buying it, it dropped to 250. And I was like, crap, I should have waited. And my wife at that time said, because we keep our money separate. So she's like, well, I want to buy it, but I think it's going to come down more. I think it's going to come down more. And she never bought that Berkshire A, you know, stock. And I kept asking her, I was like, you know, this is a good time. I bought it. I think it's a good time to buy. And she's like, no, I think it's going to come down more. And then after that, Berkshire started to gain, and it never looked back. and I just sold it. I alerted my Discord members that I had a limit at 500,000 to a auto sell. If it hits 500,000, just sell the stock. And that's what she did, or that's what, sorry, and that's what happened. So I had the sell order at 500,000, the stock hit 500,000, and boom, it was sold. And when it got sold, I wasn't even prepared to sell it. I wanted to hold it for a long time because I knew that in this economy, when all the tech and everything is selling off, Berkshire is going to do phenomenal. And I was like, crap, I completely forgot about the sell order that I had. But then it sold. I was like, okay, fine. You don't look back on the stock that you sell, and you never compare, I should have, could have, would have, because in stock market, you're going to go crazy if you start looking at could have, would have, should have. And then few days later, the stock is at 540. And I'm like, oh my God. And I actually took it out of my watch list for some time, because I do that. If I'm like buying the stock, I try to, like right after selling it, I just try to stay away from looking at it, because this gives you a bad feeling that you should have just, held the stock longer. So then now it's at 578, 580,000, 574,000, 474,000. So I am not feeling happy. I just looked at it the other day. I was like, oh, great. Thank God I sold it. I would have missed this opportunity. So it's never going to work the exact way that you want it. But if you get out stronger, or if you get out in the profit, then you did a good thing by either selling it, or by buying it, or by timing your entry. So again, timing your entry is what I look at. Timing my entry in the stock market by looking at what's going on with S&P 500, because I personally feel the S&P 500 will drop below 3,800. It can go down to, I think, 3,500 to 3,600, in my opinion. Between 32 to 35 is what I have mentioned to my Discord members. So it can reach to that level, or it may not reach to that level, and it can just take a flight up from 4,000 or 3,800. And that is why, even if it touches to 3,500, if you are not planning to take your money out tomorrow, or when it touches to 3,500, then the money that you lost is all on paper. Those are the gains or the losses that you're making on paper, right? It's not making you poor or rich if you don't need the money. It's just you're looking at the paper, it's like, oh, wow, okay. And the market will turn, the buyers will come in. And when they come in, and when we have prolonged buying going on, it's going to go full force. And that's when you don't want to sit back and say, crap, I missed this opportunity. So I really feel that we are in this very, very funky market situation where we don't know which direction the market is going to take turn. And that is why I personally feel that the companies that I believe in, very important. The companies that I believe in, the stock that I believe in, I want to hold those stocks, and I want to get on those stocks if I want to invest more money in those stocks now, then wait till the market drops more, and it may never drop, and then I miss out. So again, just wanted to bring this information to you. And if you like the content like this, then give this video a thumbs up, and also consider subscribing to the channel. And again, Patreon and Discord links are mentioned in the description below. And I use Moomoo for my charting. If you like it and want some free stock, the links are in the description below. Thank you so much for tuning in and for this quick update. And until next time, you all have a sparkling day.